So yeah, it's a bullish setup even in the short term. And of course, once gold breaks out above 4,380, I assume we will be here on the way to 5,000, 5,200 until next spring. That's the pattern. Usually, seasonality-wise, gold is bullish into January, February, March. These rallies can last into sometimes April and May, but the first 3 months are always very strong. Don't forget, we have the Chinese New Year coming up in early February, which attracts a lot of physical buying. A lot of gold is going to be gifted for the new year in China, and that is a strong driver for gold. And I assume, well, there is a lot of theories. It's difficult to come out with proven facts. Unfortunately, the commitment of trades data is not telling us the exact names, right? You can see there's big commercial players, but you don't really know who are those banks or who are those players, and you also don't know in which name or for whom they are actually acting, right? So this is all very intransparent.
Gold has re-established a strong bullish structure after a sharp $500 correction from its October double top near 4,380, followed by a multi-week consolidation within a triangle pattern. The recent breakout above the downtrend line and a new higher high around 4,353 confirm renewed upside momentum, with pullbacks likely to remain limited above the 4,150 to 4,200 support zone. As gold continues to test its all-time high resistance, a decisive breakout above 4,380 could open the way toward the 5,000 to 5,200 range into early spring, supported by seasonal strength, increased physical demand ahead of the Chinese New Year, and expanding global liquidity. Before we go to the interview, please like the video and subscribe to the Bullion Vibes for more informative content.
I can quickly share my little daily calls that I do. We have a daily chart that I publish for free every day. So that's called the Gold Daily Call, and it goes back for the last few weeks basically and gives a short to midterm outlook on gold. And that is besides all the other in-depth write-ups that I'm doing. So this is the gold chart going back to basically mid of October, and you can see we had this double top here at 4,380, and then we had this sharp sell-off. I mentioned it before, $500 down within 5 weeks, and then it took a while until gold basically came back up on its feet, failed here at this former trend line, and came back down again. But we can beautifully see here a series of higher highs, and it broke out above this downtrend line. It's been basically kind of a triangle formation of the last few weeks. Sideways consolidation within a triangle. That's the typical kind of formations that you see in a bull run in an uptrend. And we had this lengthy sideways consolidation then since end of November, while silver was already pushing higher. Gold went just sideways nowhere. And now since Wednesday evening and yesterday, Thursday, gold has pushed higher again. And this morning, or just a few hours ago, we made a new high here in this uptrend at 4,353. It's coming back down now before the weekend, but overall gold is back up on the way to its all-time high here, testing this zone. I would say this whole zone here is a resistance zone. Maybe we need 2-3 more attempts. I doubt that we will break through this uptrend, this green line here. That means 4,150 to 4,180 or 4,200 is probably the worst case already on the downside. Most likely this sideways period here will already hold any pullback. So yeah, it's a bullish setup even in the short term. And of course, once gold breaks out above 4,380, I assume we will be here on the way to 5,000, 5,200 until next spring. That's the pattern. Usually seasonality-wise, gold is bullish into January, February, March. These rallies can last into sometimes April and May, but the first 3 months are always very strong. Don't forget, we have the Chinese New Year coming up in early February, which attracts a lot of physical buying. A lot of gold is going to be gifted for the new year in China, and that is a strong driver for gold. And I assume yeah, 5,000, 5,200. That's the next target that I have. Probably until spring, can happen faster too. We've seen how crazy silver has been running up. But that's basically the bullish picture. I doubt that gold will drop below $4,000 again. That I think is only possible if the stock markets would crash. But as we now know, the Fed is expanding the money supply again, so it's unlikely that stocks are going to crash. I think overall, everything will continue to move higher, but precious metals will continue to outperform everything. So that's the classic cracker boom. And gold has been in this bullish confirmation now since end of October, about to break out here, and then I think real fireworks in January probably towards $5,000. So it's looking pretty bullish for gold here.
According to Florian Grummes, gold has emerged from more than a decade of consolidation following its 2011 peak and has been in a new secular bull phase since early last year, driven by strong physical demand from China and ongoing purchases by the Chinese central bank. Grummes notes that price discovery is increasingly shifting away from Western paper markets toward physical trading hubs such as Shanghai, Mumbai and Dubai, as long-standing paper gold mechanisms lose influence. While the exact drivers behind recent large physical flows through COMEX remain unclear, he emphasizes that the price action itself is decisive. Gold remains in a confirmed bull market, with consolidation phases resolving higher and momentum pointing to further gains. Now let's back to the interview.
I mean, we have to be honest here. I mean, gold has been in a long consolidation kind of pattern since that top in 2011. It took nearly 10 years to break out to a slightly new all-time high, and then another 4 years for another sideways consolidation below and around $2,000. And only since February of last year, we really are in this new leg up in the secular bull market. And this has been driven by the physical demand from China and by the physical buying of the Chinese central bank. And of course, the whole Shanghai Gold Exchange with their physical trading has been basically responsible for that development. Because until then, the Western paper shenanigans were able to control the price overall, more or less, with LBMA and COMEX, selling a lot of unallocated gold or paper gold. I mean, experts have, like me and others, we've talked about it endlessly, that there has been 150 to 200 paper ounces of gold defining the ounce of one real ounce of gold, right? This has been going on for decades, and I think this game has come to an end, and we're now seeing the consequences. And they have lost price control. The price is now being made in Shanghai, in Mumbai, in Dubai, in Hong Kong, and it's going to be very interesting how this is playing out down there. Well, there is a lot of theories. It's difficult to come out with proven facts. Unfortunately, the commitment of trades data is not telling us the exact names, right? You can see there's big commercial players, but you don't really know who are those banks or who are those players, and you also don't know in which name or for whom they are actually acting, right? So this is all very intransparent. I mean, there has been, of course, the assumption that COMEX needed that physical gold to back up all these paper claims. It's also been the assumption that maybe America wants to increase their gold holdings again, as they became more aware that China basically cornered the gold market. I think also that, and I mean, that's not a secret, that Scott Bessent has said this already, that they could basically use a much higher gold price to value the debt against it, and then basically could write off the debt. I mean, that's might be also a strategy down the road. I think there's various reasons. Definitely there has been a run on the COMEX in the beginning of the year, and they needed to make sure to have enough physical metal. It's always very tricky to come with the exact meaningful explanation. I personally prefer to just look at the price. So just look at the price action and it tells you everything. We are in a bull market, gold is pushing higher, it's becoming unstoppable. We had a healthy few weeks of consolidation, but as you can see, we are nearly back up to the new all-time high already. So this trend is in motion and is not stopping.
Gold remains in a confirmed bull market, with upside momentum strengthening near key resistance. Florian Grummes attributes the trend to strong physical demand from China and a shift away from Western paper-based price control. Drop your thoughts in the comments section, and if you found this insight valuable, like the video and subscribe to the Bullion Vibes for more updates. See you in the next video.